Hello and welcome to yet another Equity for Keeps video. We are still on this hedge fund manager topic on MarketWatch, but the interesting thing is that we want to cover some of the opinions of the people who have read this, and you can see we have about 320 comments. So let's quickly go down there and see what people are saying. Okay, the chap is known as Slice of Cake, and he's known as a leader. And this extreme forecast assumes no government interventions whatsoever. Globally, fiscal and monetary policy is getting more aggressive every few days. Social policies are also being enacted. In sum, this event is not a systemic risk like 2008, and that event resulted in a 50% decline. This event will probably play to at 40%. And then Michael Schofield, another leader. Well, we need to know probably what leader means something else here. He says anything is possible. It's possible that a depressed world economy could absorb 6 or 7 trillion in treasuries over the next 2 years or so. I plan on something less optimistic. Then a B. If the market falls in 4%, you will not be worried about money anymore. You'll be worried about obtaining ammo, food and water. Only a totally clueless and out of touch fund manager thinks the world just proceeds peacefully while they take hedge positions and clean up in the chaos. You don't need money when your credit card is issued by Smith & Wesson. The rich are the least prepared for this kind of world. Depressions are how you get world wars and revolutions. How to take a short position when you're dead. Let them eat cake. Okay. Let's see what Tom Sullivan here is saying. When a hedge fund manager saves 5% of stock market drawdown core, that likely means they might plan to continue substantial shorting until the slump has hit 50% plus. After all, they have been playing with house money for almost 2 weeks, and they have momentum and option traders on their side. Cash flow will soon be a problem for companies and individuals. Incredibly unlikely to drop 74%. This is what Paul Sibley is commented. Once people see in 2 months that they didn't die and are mostly just bored sitting home, things will start to get back to normal. Okay, let's see one previous. Okay, this chap with a German name, Gunter, says, yeah, sitting home or not spending money. Okay, still the Don Franco says still spending money, just shopping online. And then Steve Rimnack, recently the Dow went from 29,551 in February to 19,174 today, which is 54% down, or about 35% drop from its peak. And then Tom Sullivan's commented, I agree about 40 to 50% drop that Warren Buffett mentioned off the top of his head is almost certainly to occur. Companies are not going to quickly hire up after the virus appears. Many surviving companies will have to lay off more people just to service their fast-growing debt. This is the setup game of deep pocket shorters. With so much panic and fear in the market, messages like this have an excellent probability to become a self-fulfilling prophecy. Now, guess who stands to benefit from this? And then Tom Sullivan has been commenting on a lot of comments it takes a gullible audience for target upwards to work. That is, with no change in the fundamentals. And we show are gullible here in the US, as evidenced by election of Trump. We are very good as a group at being in denial. Then Jason Winter, oil is now below $20 and sinking. Retail chains are closing. Entire states on lockdown. There's no magic bullet here. The losses are just going to keep piling up. Prices are already locked in. Oil going down helps economies. And that was David. Okay, there are a lot more here, and I don't think we should read everything. Okay, let's see if we can just do this and we'll round up. Seb Robert. It's always easy to add tons in the fall, but the Russell 2000 has already lost 40%, and I believe this market will bounce back violently because there's no indication that the crisis will last a long time. Okay, there are two previous comments. Okay, let's. Where are the indications that it won't last a long time? We are watching the crisis unfold in real time. There are no comparables in modern markets or globalization. Do you think China is fine now? That was wave one. And then Seb Roberts. Sell of stocks I'm buying. It's called a market. Then John Locke. We haven't seen a downturn in the number of new COVID-19 cases. I would give it 2 weeks from that date that we come off lockdown. Best guess will be end of April if people behave. Otherwise, we are probably looking at June, even if only end of April. The recession from loss of jobs and income will be significant. I think S&P 500 would do a 60 to 90% retracement from the high. So Stephen Rainmark. Another reason for the markets to bounce back is if we have been creating new money. There was enough money to bring the stock market up to its recent highs. There is no other place to invest this new money except maybe real estate or bonds. Interest rates are near zero. Stocks will continue up past recent highs. The question is when and how much does the money devalue in purchasing power. In this environment, the stock shares better to own than holding or invested money in the long run. Okay, thank you very much for watching, and we just wanted to ensure we covered the opinion of the readers, because some of the readers were also saying that the opinions weren't taken into account. Okay, we are doing the bit we can to take account in the opinion of some of the readers, who also includes ourselves. Thank you for watching, and subscribe to our channel. Thank you.